Welcome back to Morning Markets. This morning we'll take a look at some of the key economic data points which we can expect to see this week. Last week, global equities were down in aggregate. Global equities were down 1.2%, mainly weighed by the US, S&P 500 down 3.1%, and the technology component being the Nasdaq down 3.5%. If we look at Europe, returns were mixed. Germany did offer a degree of support. Germany's market was actually up 2%, and that was supported by a large amount of the defence and the infrastructure plans which were unveiled last week. The UK large cap market slid 1.2%. However, Japan, in the global terms, offered a degree of support, up 1% over the course of the week. Given the discussions which we're hearing around trade tariffs and the impact on inflation, we saw US Treasury bond yields move up very incrementally higher, around 9 basis points through the week, putting 10-year Treasury yields back at around 4.3%. Trade uncertainties, one of the key aspects which has been influencing markets through the course of the last week. If we look to the week ahead, one of the key aspects in the US will be the inflation reports. Markets are going to be looking for early indications that tariffs are already starting to have an impact on prices. If we look at the headline and the core CPI indices, they're expected to rise by about 0.3% month over month, which is cooling from some of the higher prints which we've seen in previous months of 0.4 and even 0.5% in terms of the monthly increases. So a slight cooling in terms of the historical reading, but it's also going to be important to get a feel for the expectation of inflation as they're coming through. With that, we'll also receive the producer prices indices, which essentially tracks how much businesses are being paid for the goods in which they produce. The index is expected to rise by 0.3%, which is cooling very marginally from 0.4, which was in the previous month. And the core component, which strips out food and energy, that's expected to remain stable at around 0.3%. So the look back is expected to be pretty positive, actually, slowing down from some of the higher readings which we've seen more recently. But it's going to be really important to get a feel for how this is impacting forward-looking expectations of markets. We're also going to get an update in terms of the JOLTS data, which is job openings and labour turnover, and the Michigan Consumer Sentiment Index. The consumer and the security of their jobs is really integral to the health of the US economy. Consumer spending makes up around 60% of GDP in the States. Canada, who's also reflecting on some of the possible impacts of tariffs, are expected to lower their interest rates by 0.25% this week. If we turn to the UK, it's a big update in terms of GDP. GDP is expected to expand by just 0.1% in January, which is down from 0.4% in December. So it's showing positive growth, but only just. We're seeing a cooling from what was quite a strong reading at the back end of last year. And across in Asia, China, the key aspect which we'll be focusing on there is the output from the Two Sessions conference, which will provide a bit more detail on government spending plans to re-stimulate the Chinese economy and also how they intend to deal with the tariffs which are being imposed by Trump. So quite a lot in store this week. We're going to keep you up to date in terms of the key outputs of those economic prints and the market reactions. So please do tune in. Thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.